Fine. Is it? Some companies which issue bonus. See what happens. See, if you see, very simple. Profit after earning per share. Earning per share is profit after taxes divided by n, number of shares. Is it right? Now, if you issue if you are going to issue new shares, is it right? If you are going to issue new shares, is it? If you are going to issue new shares, what will happen? Definitely the number of shares will increase. Is it right? Number of shares will increase. When number of shares increases, definitely what will happen? The earning per share will decrease. This is nothing but a dilution. Understand? That's. And sometimes what will happen? You will have most of the companies will not see. Most of the companies, they don't prefer to give what? They don't prefer to give cash dividends. Okay, they prefer to give what? They prefer to give bonus shares. Is it? They prefer to give bonus shares. If that is the case, definitely earning per share will matter. And apart from that, in some cases they will going to have what? They're going to have the rights issue. Is it? They're going to have the rights issue. What is the right issue? They will say that, yes, see, before coming to that, I will tell you one thing. I forgot to tell about this. See, what happens? Yeah. This is also very important. See, when you are talking in terms of share capital, is it right? How the share capital will work. Financial reporting, very important. Is it? Share capital. You have any idea about share capital, how the share capital is going to be classified? Yes or no? How the share capital? Fine. Okay. See what happens. Share capital is going to be, we are going to have the authorized share capital. Is it right? Authorized share capital. Authorized share capital, I assume the authorized share capital is 10 million. Is it? This is the maximum share capital a company can issue. Is it? Is maximum share capital ka company. Now what happens when you have the authorized share capital? Now what it says, they will say that we are going to have the subscription. Is it right? You have the subscribed share capital. People will not sell all the shares. Is that? Companies will not sell all the shares. They say that subscription is how much? Subscription is assume that they need how much? They say that they can go for 6 million. Is it right? Now, after that, what will happen? There is a issued share capital. Is it right? They will have a issued share capital. Issued share capital is going to be how much? 5. They are issuing how much? 4 means how much you need, that much issue. Is it right? Now, this issued share capital will be again, the last one is going to be called as a paid up share capital. Very important. In the interviews they will ask you this. Okay, assume paid up share. See, it may remain same. It may be different. It doesn't matter. That just I am giving an example. There is no rule that. But only thing is that the lower value should not be more than the higher value. 4 million, you are coming from 10 to 6, you cannot become 10 to 7. Okay, that's as simple as that. This share cap, whatever the paid up share capital, this is going to be shown in the what? This is going to be shown in the balance sheet. Is it right? Now, all these are there. Is it right? All these are there. Authorized, subscribed, issued. Last one is the paid. Now, what happens if in future? Is it right? In future, company needs capital. Okay. When the company needs capital, what they will do? They will not go for new people. Is it right? They will say that for the existing shareholders. Is it? For the existing shareholders, they will give that offer for the existing shareholders and say that if you want to buy, you can buy. If you don't want to buy, then we will go for a new shareholder. This process is called as what? This process is called as a rights issue. Means existing shareholders will have the rights. We have the preference first. Is that you are the shareholder? Is that company what they will do? They will say that they will first offer to you that yes, are you willing to take? Now what you will do? If you are satisfied with the company performance, you will prefer to buy. If you are not satisfied with the company performance, you have every right to decline also. Is that you have every right to decline also. That is what we are talking in terms of right. This is the way we are talking in terms of the structure. Is it right? Very important. As a financial reporting student, you should know this. Fine. Now that's what it said. You have the fair value, you have the bonus issue, you have the rights issue. This is what we are talking in terms of rights issue. What will happen definitely if the number of shares increases? Is it right? See what you are doing. You are calculating EPS. Is it right? You are calculating EPS. When you are calculating EPS, is it right? When you are calculating EPS, what will happen? 1 minute. Is it? When you are calculating EPS, what happens? Assume how much profit after taxes divided by number of shares. You have 10,000 is the profit. Number of shares is going to be 100,000. Is it right? It comes to how much? It comes to 100 by the EPS. Now what happens? You are issuing rights issue. Is that bonus issue? When you say you are going for a bonus issue, is it right? What will happen? Is it? You will have the profits will remain same, but what will happen? The number of shares will increase. Is it right? Numbers of shares are increasing by assume that 20,000. Is it right? Number of shares are increasing by how much? 20. Just is it right? 20,000. What will happen? It will be how much? 10,000 divided by 120,000. Is it? 10,000 divided by 120,000. How much will it come? It will come how much? It will come 0.083. Is it? This process of decreasing the earning per share is otherwise called as a diluted. Diluted earning per share. Is it a diluted earning per share? It may happen because of so many different factors. Is that this much we are going to work it out? What is the full market value? What is the bonus issue? What is the rights issue? And what is the diluted earning per share? Is it earning per share is divided? What is the basic earning per share? What is the diluted earning per share as such? Is it right? What is the basic earning per share? And what is the diluted? Diluted earning per share is nothing but definitely we are going to make some adjustments. Is that either in terms of earnings or in terms of number of shares? We will calculate earning per share based on the normal price. We are calculating based on the bonus shares. We will calculate based on the rights issue. This type of question will be there in a part. Is that they will give in the additional information. Is that they will give in the additional information in section C. You will give the balance sheet and they will say that yes, earning per share. They will give a small point. Is that maximum how much they will allocate? They will allocate this for how many marks? This for 3 marks. Okay, only for 3 marks. As simple as that. We don't expect more. But remember, every mark and very easy to score. Is it right? Very easy to score. What it says, you have the what is the basic earning per share? As simple as that. You have profit after taxes divided by number of shares. Is it? Profit after taxes means after all the payments. Is it right? As such. When we are saying number of equity shares in terms of weighted average, is that we'll take into consideration. We take into consideration the previous year, previous year, we are previous. We take into consideration, that's as simple as that, 2019 plus 2020, is it right? 2019 plus 2020 divided by 2, number of shares, is it right? That's what is it. So there is a full market value, as simple as that. The calculations are on three terms. One is we are talking in terms of full market value, one we are talking in terms of the basis of bonus shares, and definitely bonus shares is nothing but number of shares will increase, and third we are talking in terms of rights issue, is it? Well, what is the weighted average cost of capital? This is very important, is it right? Brought forward divided how for what is the fraction of how many months, is that we should not take 2019 and 2020, is it? We should always make it into a function how the number of how many months, is it right, that is happening in the previous year, and how many months we are happening in the current year. Okay, if that is the case, little bit you have to be, it's not difficult, but we have to be a little bit careful when we are talking in terms of weighted average cost of capital. Fine. Now the first one is that what it says, very basic calculations, is that basic calculation. You have the Robert how much, you have the shares of 6,000, they have issued in 1st January, they have issued in when they have issued in 1st January 2003. On April 1st, they have issued, Robert issued at full market price, earnings for the year 2003, how much? Earnings of 1,200. Fine. Now, what is important is how much we have to, for how many months we have to take into consideration. Is that they are asking us to calculate what? To calculate earning per share on 31st December 2003. This is not 3,000, this is 2003. Something is missing here, I am writing. Okay, 1,500 shares, is it right? 1,500 shares at full 1 minute. This is not here, is it right? This is not here. I am writing with the red pen. Okay, issued 1,500 shares at full market value. Is it 1,500 shares at full market value? Just you add this. And Robert earnings are how much? Robert earnings are 1,200. Is it right? Now, what we have to do? No, we will do here only. Fine, we'll do here. Take it as a solution. Is it right? Particulars, number of shares, fraction of year held, and weighted average. Is it right? Now, how much is the opening balance? the opening balance of shares. Okay, opening balance is how much? Opening balance of shares are how much? Opening balance of shares are how much? 6,000. Fine. What is the fraction? See, this opening balance is how much? This opening balance is from 1 1. This balance is from 1 1 2003. Is it till 30 till 31st March 2000. 31st March 2003. Is it, they have already, how many shares are there? 6,000. Is it right? For how many months they are working? They are working for, they have means they have issued on 1st April. Okay, we will take that 1st April in the next stage. We will take that 1st April in the next stage. 6,000 into 3 by 12 means 1 by 4. How many shares we'll have? We have 1200 shares. Fine. We have how many shares? 12. Next, on April 1st, is it right? On April 1st, 2003, is it right? They have issued new shares, is it right? New shares. How many shares they have issued? They have issued new shares of how many? 1,500. Is that they have issued new shares of 1,000? See, now if you add this one, is it right? How many shares are there? How many shares are there? You have 7,500. Is that 7,000? Now these 7,500, they are held for how many months? They are held for 9 months. Is that 1/4/2003 to 31/12/2003? Is it right? 31/12/2003. How much we will have? Just make it sure. 7,500 times 9 divided by 12. It comes to how much? It comes to how much? It comes to 5,625. Is it right? This is column 1, this is column 2, this is column 3, column 4 is nothing but 2 times 3. Okay. Now, how many shares we are having total now? Is it how many shares we are having total now? We are having 5, 2, 8, and 5. One minute. 6,000 into 3 by 12. How much we'll get here? How much we'll get here? I have written wrong. 1,500. Check again. Yes. Okay. Please check my answers. Okay. Very simple. Okay. Immediately if I have written wrong, just immediately give me alert. As simple as that. Is it right? That is how much you'll get? 5,217. Is it right? That's all. This is what it is. It is the weighted average number of shares. Is a weighted average number. Now what happens? Now earning per share is nothing but profit after taxes divided by weighted average shares. How much is the profit after taxes? Profit after taxes is 1,200 divided by 7,125. How much? 1200 divided by 7125. Is it right? How much? It is $0.168 EP earning per share. Is it very important? What we are learning and how it is going to be affected is the most weighted average. Why we have done this? We have done this to understand weighted average number of shares. Okay, weighted average number of shares. If you have this thing, other things are that this is the most first time we are doing like this. That is why you have to be very careful. Now, if they issue bonus, is it? If they are using bonus shares is nothing but what? Number of shares will increase, is it right? Number of shares will, what is the fraction, is it right? If there is only a bonus issue during the year, the bonus shares may be assumed to have been in the issue for the whole year. Means we are not talking about the bonus issue. See what in the previous case, what happened? You have to compare. In the previous case, 1/1/2003 and 1/4/2003. Is it right? We have the fraction. But if whenever you are talking about a bonus issue, it is going to be considered for a whole year. Where there is no more, where there is more than one issue during the year, it may be easier to use a weight. If they are issuing bonus shares for 2 times, then we have to use the weighted average cost, weighted average number of shares, multiplying the pre-issue number of shares by the fraction. Is right? What is the bonus fraction? New number of shares divided by old number of shares. Fine. We will take this and we will do another question on that. Is it right? Now, Robert has 6,000 ordinary shares issued on 1st January. On 1st April 2003, they have issued 1,500 shares for 1 for 4 shares. Is it 1 for 4 shares? This is the fraction. Is it right? Robert earnings is 1,200. You have to calculate what? You have to calculate the earning per share. Fine. Again, when they have issued the same thing, is it right? They have issued for 2003 and subsequently they are issuing the bonus shares on when? To April. Is it right? They are issuing the bonus shares on April. Fine. Now, solution. Particulars. Is it? Particulars. Number of shares. Particulars. Number of shares. Fraction. Next bonus fraction, and we take bonus fraction also. Is it? Bonus fraction, and last one is weighted average. Rizwan joined? No. Fine. Is it? How much is the opening balance? How much is the opening balance? Opening balance is how many shares? 6,000 shares. Is it right? Opening balance is 6,000 shares. Is it right? What is the new number of shares divided by old number of shares? Is it right? Is it right? New number of shares divided by old number of shares. Bonus fraction is what? This is for how much? This is for, I'm writing here. Is it right? Is it? This is for 1/1/2003 to 31/3/2003. Is it right? How many? What is the fraction? 3/12. What is the bonus fraction? See the things. New number of shares are how much? They are issuing 1 for 4. Is it? They are issuing how much? 1 for 4. Then new will be how much? New will be 1 plus 4 equal to 5. Okay. Old is how much? Old will be 4. Is it? Old will be how much? Old will be 4. New will be how much? 5. Okay. Fraction will be how much? 5 divided by 4. Is it right? 5 divided by 4. Fine. Next. Are you clear about this?
Can you repeat this point again, please?
Yes. Good. One minute. Fine. See, is it? See, what is the rule? Rule says that new shares divided by old shares. Okay, new shares. How many new number of shares? New. How much they are issuing? They are issuing 1 share for 4 shares. Is it? They are issuing how much? 1 share for 4 shares. Now, old shares are how much? Old shares are how much? 4. New will be how much? New will be, is that? New will be how much? New will be old plus the additional share. Okay, old shares plus bonus share. Old share plus bonus shares divided by old shares. Old share is how much? 4. New bonus issue is how much? 1. Old shares is how much? 4. Means how much is there? 5 divided by 4. How many new shares are there? You are holding, is it right? You are holding how much? You are holding 4 shares. Is it right? Now they will issue you one additional 1 share for, if you are having 4 shares, they will give 1 share. Means how many new shares you will have? You will have total new shares will be 5. Is that? Previous means what is the increase? As simple as that. Is that 5 divided by 4? Previously you have, you assume previously you have 4. Now what is happening? 5 divided by 4. How much you will get? 5 divided by 4. You will, now there is how much? You will get 1.25. This is the fraction. Previously you have 4 to 4. Now you have 4 to 5 shares. How much increase is there? The increase of how much? 2.5. The increase of how much? 2.5. It comes to how much? 1.25. Is it clear?
Yes, it's clear.
Now, okay. Now, what happens? Put the numbers. 1, 2, 3, 4. Is it right? 4, 5. Column 5 equal to 2 times 3 times 4. Okay. Column 5 equal to 2 times, column 2 times, column 3 times 4. How much you will get? 1875. Is it right? Now, bonus issue Bonus issue is how much? Bonus issue is how much? Bonus issue is how many shares they have issued. Bonus issue for how many shares? For for 4 shares, is it right? For 4 shares, one bonus, is it right? For 6,000 shares, is it how much bonus? How much they have here? It is given 1,500. Is that when they have issued? They have issued on 1/4. Is it right? They have issued on 1/4. If they have issued on 1/4, how much is there? It is nothing but 9/12. Is it right? Bonus fraction is not applicable here. Is it right? Bonus fraction is applicable only to a, that's why I say it is for the full year. Is it right? It is for the full. It is not, it will not be applicable for here. How much you will get? 15,000 into 9/12. It comes to how much? One minute, 1 minute, 1 minute. One minute. No, 1 minute. Is it? 1 minute. 1 minute. Fine. Okay, now, okay, now. Fine. Don't do anything there. Okay. How much is there here? Is it? How much is there? 7,500. Here we have to do 9/12. Okay. Means 7,500 shares we are holding for how much? How many months? We are holding for 9 months. Okay. 7,500 shares we are holding for how many months? 9 months. 7,500 into 9 divided by 12. It comes to how much? It comes to 5,625. Total is how much? 9 0. Is it right? 0 7. Array. Fine. How much is the total? It is 0 0 5 7,000. Is it? Now what we have added in the previous case and this case, we have added the bonus fraction. Is it right? We have added the, is it clear about this till now?
Can you repeat again?
Fine.
From where 5,625?
I'm not striking it off. I'm not striking it off. After that, I will strike it off. Okay. Is it right? Can I remove now? See that. Is it right? See, sir, yes. 7,500 is the total. 7,500 is the total. How many? For how many months? 9 months. Is it right? 7,000 into 9. It comes to how much? It comes to this much. Is it? I will put like this. 7,500 into 9/12. Is it right? Into 9/12. Actually, I have put line here before that. Okay. Is it clear now? This is the here it is 7,500. It is 9 by 12. This is nothing, and this is, now I am reducing it. Is it okay, clear now? Fine, good. Total, how much it will come? If you take into consideration total is how much? Total is 7,500. This is nothing but weighted average number of shares. Is it? Earning per share after bonus issue is how much? What is the profit after tax? 1,200. Is it right? 1,200 divided by what is the number of shares? 7,500. $0.16 per earning per share. Okay. Is it clear now? Is it fine? Now, what is the rights issue? Is it right? What is the rights issue? Means, what is the rights issue? Salaam alaikum Rizwan, how are you? Yeah, what is the rights issue? Is it right? Rights issue of bonus actual market price divided by theoretical x price. This is a new concept we are using. Is it right? What is the actual market price will be given in the question. The theoretical x rights will need to be calculated. Is it right? We have to calculate. Essentially the weighted average value per share of the revised shareholding. Is that weighted average value per previously we have calculated weighted number of shares. Is it right? Now what we'll do, we'll calculate weighted average price. Means what happens? Assume that you are having 100 shares. Is it right? 100 into 3. Is that this is before? Is it right? You will have what? You will have additional shares. Is it right? They are issuing how many shares? 1,000 into 3. They are issuing another 100 shares. Is it right? They are issuing 100 shares. Assume that they are issuing at a rate of 2. I am just giving a point. How much will happen? 100 plus 1100. Is it right? It is nothing but it is 3000 plus 200 divided by 1100. 3200 divided by 1100 is nothing but theoretical x market price. Is that theoretical x rights price? Okay, that's the only calculation we have to do. There's nothing more than that. Are you understanding? See that I will write this. Is it right? Before what will happen? Before issue. Is it right? Before rights issue. Is it right? Before rights issue, how many is there? Price is how much? Price and number of shares. Price is 3. Number of shares are 1000. Fine. after issue. Is it right? After issue. Is it right? What will happen? Assume price is 2 and how many shares are there? 100. Is it right? Thus you have to, we have to multiply it. Is it right? We have to multiply it first. Then we have to divide with the number of shares. Is that theoretical X rights price? Then we will do this. What it says, Robert has 6,000 shares issued on January 1st. Is that right? On April 1st, 2003, Robert issued 1,500 shares in 1-for-4 rights issue. Is it right? In 1-for-4 rights issue at a price of how much? At a price of 2.5 per share. When the market price is how much? When the market price is 4. Is that when the market price is how much? When the market price is 4. Now what we have to do? Robert earnings are 1,200. They are asking us calculate the Robert's earnings for the year 2003 as such. Is it step 1? Step 1. What first what we have to do? Theoretical X rights price. We have to know what is the price. Is it right? We have to know what is the price. Is it? We first write particulars. Is it? First write particulars, number of shares. Is it? Number of shares. Now price per share. Is it? Price per share and total value. How much they have the shares previously? Number of shares. What is the how much they are holding the shares? They are holding 4. Is that rights? 4 means for every 4 shares they will give how many shares? 1 share. Is it right? For holding. Now we have to first know what is the value of 4 shares. Then we should know what is the value of 1 share. Is it right? Value of 4 shares. Is it right? Well, number of shares are how much? 4. Price per share is how much? Price per share is also 4. Is it right? Don't get confused. These are the 4 shares. Is it right? This is the value per share. Is it right? This is the 4 share. 1, 2, 3, 4. 4 is nothing but 2 times 3. Is it right? How much we'll get? We'll get 16. Is it right? 16. Now, what is the rights issue? What is the rights issue? Rights issue is only 1 share. Is it right? Right issue is 1 share. How much? 1 share. Okay. How much they are paying? 2.5. Is it right? What is the value? 2.5. Total is how much? 18.5. Is it right? 18. How many shares are there? 18.5 is equal to for how many shares? 18.5 is equal to 5 shares. Is that 18.5 is equal to 5 shares? 18.5 is it right? Now, theoretical X price is it? Theoretical X rights price is it? X rights price is nothing but the total value divided by total shares. 18.50 divided by 5 shares is equal to how much? Equal to how much? Equal to how much? 3.70 per share. Are you clear about this? Fine. Okay, this is the step 1. Okay, and what is the step 2? What is the step 2? Step 2 is nothing but calculation of the is it calculation of earning per share. Is it calculation of earning per share? Particulars, is it right? Number of shares, particulars number of shares, fraction of year held, is it right? Next you have the rights issue, is it right? Rights issue, is it right? And you have the weighted average. Fine. Now put the columns. Okay, it will be easy for us to know 1, 2, 3, 4 and 5. Okay, now how much is the balance forward? Is it right? Opening balance is how much? Is it right? Opening balance is how much? Opening balance is how many shares? 6,000. Is it right? Next 6,000. Fine. And how many months it is there? It is for 3 months. Is it right? Rights issue bonus fraction. Rights issue fraction. Is it right? Now rights issue fraction, is it right? Rights issue fraction is nothing but the market price per share, is it right, divided by theoretical X rights price. Is it theoretical X right price? This is why I have put arrow. I cannot write that in detail. Okay, I cannot write that in detail. That's why without writing this, you will not get clarity where how you will say that from where I got it. Is it right? From where I got it. Is it? How much is the theoretical market price is how much? Market price is 4. Theoretical market price is how much? 3.7. How much? 3.7. 6,000 into 4 divided by 3.7. Is it right? What is the weighted average? Weighted average is nothing but, see the thing, 2 times, is it right? 2 times 3 times 4. Fine. Column 2, number of shares, fraction 3 by 12, rights issue fraction 4.7. 4 by 3. How much you will get? Six thousand times 3 by 12 times 4 divided by 3.7. How much? 1,6 2, 2. Right? Yes. Next. How much is the rights issue? Is it right? How much is the rights issue? Rights issue is how much? For one share, if you they will give one share if you are having 4. Is it right? 1:4. Is it right? 1:4 shares. Now, how much they are issuing if you take 1:4 shares? 1500. Is it right? They have mentioned here somewhere. They have mentioned 1500 shares. Yes, issued 1500 shares. Is it right? 1500 shares. Fine. Now, we will do in the next stage. Okay? We will do in the next stage. How much is there? Is it? How much is there? 7500. Is it right? 9/12. Is it right? 7900. 9/12. How much you will get? Is it? How much you are getting? 7000 into 9/12. It comes to how much? 5625. 5625. Is it right? If you add this one, 7 7 7 4 2 7 2 4 7. Is it right? 7 2. This is weighted average number of shares. Is a weighted average number. Now, if you take into consideration earning per share, profit after taxes divided by weighted average. Is it right? Weighted average number of shares. How much is the profit after taxes? 1200. Is it right? Weighted average cost of shares at 7247. It comes to 0.1656. Fine. Okay. Is it clear for you? It's not difficult. Where there is a difficult, we have to focus on the practice questions. That's very important. That is where I have realized that we have to work on those. Where there is a bonus element, the shares issued during the year, bonus or rights issued, these bonus elements is to have issued at a same time as a original shares. That means we want, why we are doing this, we see why we are talking about, why we are talking about 3/12, why we are talking in terms of 9/12, what is the reason? Is it right? That's what we want to get. What we want to get the equality. Is it right? We want to get the balancing factor. Is it right? That is the reason we are doing. Is it? We have to get a balancing factor. Yes. If you are holding for 6 months, if you are holding for 3 months, that is the only thing. That is the only thing which is going to be considered as such. Is that nothing is there? In order to make a meaningful comparison, we need to adjust the previous year earning per share. We have to know what is the last year earning per share and what is the current year earning per share. We will multiply the previous year earning per share by the opposite of the inverse fraction. Is it right? What is the bonus fraction? Bonus fraction is 5 by 4. Is that we have done this? Is it right? Bonus fraction is 5 by 4. When you are making a comparison, is it right? When you are taking a comparison, what will do? Bonus fraction will not be 5 by 4. Bonus fraction will be what? 4 by 5. Is that? Bonus fraction will be 4 by 5. That's the only basic understanding we are doing. Is it right? Now, that is the comparative. What it says? Is it? Robert issued have 6,000 shares on 4th January. I have not taken this from the Kaplan, okay, because I thought this is more easy for you to work it out, okay. Robert issued 6,000 shares in issue January 1st. On April 1st, 2003, they have issued 1,500 shares at 1-for-4 bonus issue. Robert earnings for the year 31st December is originally calculated as how much? 18 cents. Is it 18 cents? What they are asking us? They are asking us to have restated comparative earnings per share. Is it right? Restated comparative earning per share. Is it right? Now, what is the bonus fraction? Is it right? Step 1. Bonus fraction is what? Bonus fraction is what? 1 to 5, 1 to 4. Is it right? 1 to 4. What is the, again I am writing new shares is divided by old shares. Is it right? How many will be the new shares? 4 plus 1 by 4. Bonus fraction is 5 by 4. Is it? We have to restate earnings. Is it? Restate the earnings per share. Is it? Restate the earning per share. What is that? When you have doing the restating the earning per share, what is the rule they said? We do this by multiplying previous year EPS by inverse of PS. Is it? We want to know what we do. We'll take the previous year. Is that? We take the previous EPS times inverse of bonus fraction. Is it? Inverse of bonus fraction. What is the previous year? Year is how much? 0.018. Inverse will be how much? Inverse will not be 5 by 4. Is it right? Inverse will be how much? 4 by 5. 0.18 into 4 divided by 5. It comes to how much? It comes to 0.144. Please check. Got my point? Restating is nothing but you have to do the inverse of that. Fine? Keep this concept. Concepts are small concepts, but very this and see without revision there is nothing easy. Is it right? Is it? Now, what it says? 6,000 ordinary shares. They have Robert issued 1,500. Means this is with respect to what? Previous one is with respect to bonus issue. Is it right? Previous one is respect to what? It is with respect to bonus issue. Fine. This example is related to what? This example is related to rights issue. Fine. Same thing. That's not nothing. We are going to. We have to. Is that we have to we have to do it as well. What is the rights issue? How much we got that fraction in rights issue? Where is that rights issue fraction is how much? 4 divided by 3.7. Is it right? 4 divided by 3.7. Remember this, okay? Remember this. How much is the fraction? 4 divided by 3.7, okay? Where it is there, you just make it a point, okay? 4 divided by 3.7. Is it fine? Now, rights issue fraction. Is it right? Rights issue fraction. Refer rights issue. Rights issue example. How much is there? 4 divided by 3.7. Is it right? Now restate the comparative earnings. Is it right? Restate the comparative earnings. Previous year EPS times reverse. Is it right? Reverse of rights fraction. Previous year is how much? 0.18 times 3 by 7, 3.7 divided by 4. It comes to how much? Yes. How much? 0.166. 0.166. Fine? Good. What it says, is it? No. Are you understanding what's happening? Fine? This is easy. Easy things you will understand very fast. Difficult things you have to understand. That's very important. Okay? Difficult things there. Is it right? Now, what it says, what is the dilution? This is the very easiest 3 marks. 3 marks. Somewhere it will be given. Okay? Somewhere it will be given. Okay? Not more than 3 marks. Very simple. But it will be there. Okay? We have to work it out. That either they will mix it in the section B, they will talk about section A, or they will do in section C. Anyway, is it right? Now we will integrate all the concepts. Okay, we are integrating all the concepts slowly and steadily. Till lecture 10 we are talking about individually, but now we are not talking about individually. Something we are doing in lecture 15, we will take something related to lecture 2. Okay, likewise we have to work it out. The diluted earning per share is nothing but the impact of future. Now what happened? I told you is that you are increasing the number of shares. Is it right? What happening? The earning per share will decrease. The earning per share will decrease. You have convertible bonds. Is that when you say convertible bonds, converting to what? Converting to equity. You have 2 things. Is that you by if they say that 10%, now you have to make very sure about this. 10% 7 year Is it right? Convertible bond. 7-year convertible bond. Is it right? Definitely. They will mention that this, yeah, how much bond is always be equal to 100 reals. Is it right? $100 or 100 reals. Now they will say that how many shares we are converting. We are converting into 100 shares, or we are converting into the market price. Is that? We are converting it into a market price. We are converting into a number of shares. We have to. It will have impact on what? It will have impact on the earnings. Is it? It will have impact on the earnings. And it will have impact on the maximum conversion. Assume impact on the shares. Assume maximum conversion. Everyone will want to take the, see, equity is, see, there are both advantages and disadvantages in equity. Is there? Both advantages and disadvantages. Okay. Equity is, you have the high risk. Is it right? You have the high risk. But also what will happen? You have the high returns. Is it right? You have the high returns. Equity, you have the ownership factor. That's very important. Whereas in the bonds, it is not. Bonds is nothing but it is a secured returns. Is it? So we cannot see, never ever say that you should not write like this in any examination. You should never say that this is good or this is not good. Okay? You have to say that any aspect asset, you should make it a point that everything have some advantages and disadvantages. You will never say that this is good. Never ever say. Fine. Now that's what it says. Whereas diluting instruments, you are diluting means you are 100 real bond, you are diluting into number of shares. Is it right? Number of shares will increase. As the number of shares increases, is it right? As the number of shares increases, what will happen? Definitely the earning per share will decrease. Fine. Okay. This is what we are talking about, diluting earning per share. As simple as that. Is that we are not making that specific asset. Only thing what happens is we will pay, tax will be there. Is that? We will have profit before interest and tax. Is it right? Then you will pay interest. You will have profit after tax. Then you will pay tax. Then you will have profit after tax. You have to follow this process. Definitely. Why we are saying, whenever you are talking in terms of convertible bond, on the bonds, is it right? On the bonds, what you pay? You will pay the coupon. Is it right? You will pay the coupon rate. Fine. You will pay the coupon rate. Is it right? Coupon rate is different. Finance cost is different. Okay. Little bit more clarity will come, because yesterday I can sense. I am not, see, I am very, I follow your understanding very closely. Is that you got some confusion about what is why we have taken the coupon rate and why we have taken the expected rate. Is it right? Expected rate. Coupon rate is nothing but what is the percentage on the face of the bond. At the time of issue, how much you are saying that 5%. But what is the effective rate or market rate, required rate? See, you have issued it in the year when you have issued it in the year 2018. You are going to say that coupon rate is how much? 5%. But see, yesterday only, listen this, yesterday only what central bank has done? Central bank has done that they are increasing rate of interest by how much? 75 basis points. They have increased the rate of interest by how much? 75 basis points. Yesterday there is a news. Understand? See, when you are doing a professional course, you have to be very clear about these developments. Is it right? They have, yesterday central bank says that we are increasing the. Now what happens? You have issued at 5%, but what happens? The effective rate is that effective rate will be how much? The effective rate will be coupon plus 0.75. Okay. Yesterday I didn't explain you this. Because I didn't get that situation. Sometimes I cannot explain. Is it right? Because I'm not getting actually that scenario to explain. Now it is very clear. Is it right? You have the bond, you have the effective rate as such. Now what they have said? They have said that they have issued 6,000 shares throughout the year. At that rate, at that date, Robert has issued 5,000 convertible bonds. Okay, with an effective rate of how much? With an effective rate of how much? 10%. Fine. Robert rate of income tax is how much? 30%. The loan is convertible in ordinary shares. How much? If you have a $100 convertible loan stock, how many shares they will give? They will give 60. Is it right? Means 0.6:1. Robert earnings is 1200. They are asking you to calculate the diluted earning per share. Is it right? In order to calculate diluted earning per share, we have to calculate the number of shares. Is it right? How many shares are there? Is that step 1? Is that we have to know number of steps? Step 1 is nothing but revised number of shares. Isn't it? Now basic shares are how much? Basic equity shares are how much? Basic equity shares are 6,000. Is it right? Basic equity shares are 6,000. Now you have conversion. Is it right? You have the conversion. How much they are saying? 0.6 into 0.6. Is it right? 0.6. Is it nothing but 6,000? Is it right? How much is there? Conversion is nothing but the loan stock. Is it right? Conversion is nothing but loan stock. Is it right? Loan stock into conversion ratio. Is it right? Now loan stock is how much? Loan stock is how much? Loan stock is 5,000. Is it right? Conversion ratio is how much? Conversion ratio is 0.6. Is that right? 0.6. Now 6,000, sorry, again 5,000 times 0.6, it comes to how much? 3,000. Is it right? It comes to how much? Means if you have a stock of 5,000, how many shares you will get? You will get shares of how many? 6,000. Fine. You get the shares of. Now how much is there? 6,000 plus 5,000, 6,000 plus 3,000. It comes to how much? This is the revised number of shares. Fine. Next. Are you clear about this? No. How much is the earnings? You have earnings, is that basic earnings? Basic earnings are how much? Basic earnings is, we have to follow profit after tax, profit before interest and tax. It is nothing but profit before interest and tax. How much is the profit before interest and tax? 1,200. Fine. Next, what you have to pay? You have to pay interest. Is it right? How much you have to pay interest? 5,000. Is it right? On 5,000, what is the rate of interest? 10%. It comes to how much? 500. Is it right? You will get how much? 700. This is profit before tax. Is it right? This is profit before tax. From this, what you have to do? You have to pay tax. Is it a tax at the rate of how much? Tax at the rate of 30%. Is it right? 30%. It comes to how much? 210. Is it right? It comes to how much? Sorry, 1 minute. 1 minute. One minute. Is that how much is the it is the interest? Here also we should know. Is it? 1 minute. Is it? How much is the interest? Interest is how much? 500. Is it right? Interest is how much? 500. On this 500, is it right? How much we are paying tax? At the rate of 30%. Is it right? We are getting, see, debt. Understand this. Is it debt or loan? Is it right? They have the advantage of tax. Is it right? They have the, this is the rule. This is the rule. Whenever, why we are taking loan, why we are taking debt, convertible debt, loans, bonds, they have the advantage of tax. Is it right? This is the rule. Keep it in mind. Put one star mark here. Is that? Put one star mark here. We will use in other cases. Is it right? How much we have to make sure that on the interest we have to pay tax. Is it right? How much we are paying tax? We are paying tax of 150. How much you will get? You are getting 350. Is it right? You are getting that. Now the net earnings. Is it the net earnings? We should not pay tax on 1200. Okay, we have to pay tax on the interest only. Is it right? How much we'll get? We'll get 1550. Earning per share. This is a diluted earning per share. Is it right? It's nothing but net earnings. Is it net earnings divided by revised number of shares. Net earnings is 1550 divided by 9000. It comes to how much? It comes to 0.172 EPS. Just again you just revise this. Okay, go now only. Is it? Now only you will understand what we did in step 1, what we did in step 2. In step 1, what we did, we have taken the number of shares and we have calculated the total shares. Is it right? Total shares are nothing but the existing shares plus the conversion shares. Is it right? Existing shares plus the conversion shares. How much we are having? Is it right? Existing shares plus the conversion shares. How much you got it? We got it 9000. Is it? In the second case, see, this is very crucial stage. Is it right? This is very crucial for us. Is that you have to be very, very specific about this. Is that you have to be very specific. 5000 is the profit interest. Is it right? On the interest only we have to calculate tax. We should not calculate tax on the. Why we should not calculate tax on 1200? Tell me first. Any doubt is there? Any doubt? You have to tell. Then only you will understand. I am asking you a question. And I will give explanation also for that. No problem. I will give the reason for that also. Why we should not calculate tax on 1200. Why we should not calculate on 1200? $1,200 is already tax deducted. Is it right? Today 1,200 is already tax deducted. Is it right? Is it right? It is already tax deducted. Is it fine? I will put like this. 1,200 is what? Basic earnings is not. The moment we are talking about basic earnings, is it right? Basic earnings will always be profit after tax. Is it right? Basic earnings is already we have profit after tax. Is it right? Now, what happens? You have to take into consideration how much we are going to pay additional tax. What is the tax advantage you have? That is the reason we are not deducted on 1,200. We have taken the advantage. We have to take the advantage of 500 interest expenses. On these 500 interest expenses, we have to deduct the tax at the rate of 30%. Is it okay? You have to ask me. See, I will say I can judge where you need further explanation. Is that where you need further explanation? I can sense that. Is it right? I can sense that. Then it makes if you are not asking me the question, every time you say yes, definitely I will also suspect. Okay? Very simple. The moment you stop me, then it means you are understanding. Robert has 6,000 shares. Can I start now this one? You have to ask me questions. Okay? I can sense that where there is a issue. Is it right? Don't say yes. I'm very much clear on that. Okay? Robert has 6,000 shares in issue throughout the year 31st. At that date, Robert had issued how many shares? Options. Is it right? You have the options, means you can convert or you cannot convert. Okay? Okay, you can convert or you cannot convert. Option. This is exercisable of what? 120 per share. Is it right? 120 per share. You have the option. Is it right? Now, what they say, the average fair value of the share is how much? 1.5. Okay? Is that the average fair value is 1.5. Robert earnings for the year is how much? 1,200. It's not what are exercisable. Is it right? The options are exercisable, and the average fair value is how much? 1.5. Is it right? What we have to do? It's very two-step process. Only 2 steps. Bonus element. Is it right? Bonus element of options. Is it? Bonus element of option. Bonus element of option is, what is the formula? The formula is fair value minus option exercisable value. Is it right? Exercisable value. Is it right? Okay. divided by fair value times, is it right, times option shares. Fair value is how much? 1.5. Exercisable value is how much? 1.2. Fair value is how much? 1.5. How many options are there? 2000. 0.3 divided by 1.5 into 2000. How many shares will come? 1 by 5. Is it right? 1 by 5. 1 by 5 means how much? 400 shares. Diluted earning per share is nothing but, is it right? No, 1 minute. 1 minute. Is it? This is called as the bonus element of options. Is it? Bonus element of options are this one. Now, total number of shares are how much? Total number of shares are, is it right? Total number of shares are how many? How many shares are there? They have how many shares are there? Existing shares are how much? Existing shares are how much? 6,000. Is it? Add bonus element how many? 400. Total comes to how much? 6,400 shares. Is it? Diluted earning, is it? Diluted earning. This is the revised shares. Diluted earning per share is nothing but earnings or profits. Is it right? How much is they have the earnings? They have the earnings. Earnings are profit after tax. Both are same, divided by revised shares. Is it right? How much? 1,200 divided by 6,400. It comes to how much? Zero point 0.1875 EPS. DEPS, okay? Diluted earning per share. Fine. What we have done? Can I go to the from the slide one? Is it? No. Now you understand. Now you will have much clarity. Okay, what we have done? We have calculated the basic earning per share with weighted average. Okay, weighted average shares, very important fraction. Okay, then we have calculated bonus issue, rights issue, diluted earning per share. Is it right? In this, right? This is what it's, that is the structure. Is that you have to be little bit careful about the about this, how we have to calculate the weighted average. Is that now I will remove this, okay? At that point I will not ask you. I will, if there is any mistake, any typing mistake, now I will not make changes at that point of time, okay? Now I will do that. This is what it says, is it? I will do now. I will just make sure that, is it right? What is it? This is what. Fine. First, what we have done, we have calculated the how many shares are there in the beginning. Then we will say that how many shares they have issued. Then total shares into weightage. Okay, total shares into weightage. That's the way it will work. Fine. Next. Subsequently we will calculate the weighted number of shares, profit after taxes, this one. Is it right? Bonus issue, little bit careful, okay? This is the formula. You can understand, is it right? What is the new number of shares, okay? New numbers of shares is old shares plus the new bonus shares, is it right? Divided by old shares. Fine, you will get the fraction. In that fraction also you have to do that, is it right? Number of shares, fraction into bonus fraction. Is it? If that is the case, first you have to take the weighted average number of shares divided profit after taxes divided by weighted average number. Now you can understand the importance. Is it right? Now you can understand the importance of what? The importance of weighted average. Fine. Next. Then we have the rights issue. Is it theoretical X rights price? See, theoretical X rights price, memorize this formula. More than memorization, you should have a clarity how we are going to execute it. Is it right? Here I have given a small example. Subsequently, I have given you the example solution related to the, means what is the value of the old shares, what is the value of the rights issue. Take the total value divided by total number of shares. You will get what? You will get theoretical X rights price. Okay, theoretical X rights price. Is it right? Theoretical X rights price. Once you get the theoretical X rights price, then based on that, what we have to do? We have to same process, is that we have to calculate the weighted number of shares divided by profit after taxes, earnings divided by weighted number of shares. Fine. Next, where we will use this theoretical X rights price, we use the theoretical X rights price in the fraction. Is it right? Rights issue fraction. Is it right? Rights issue fraction. Is it right? We are using there. Is it right? Where we are using this here. Is it right? 3.7. Fine. Next, that is why. If it is, we are talking about restating means reversal. Okay. When the moment we are talking in terms of restating means we have to do in terms of reversal. Is it right? Reversal. Reversal is 4 by 5 by 4 comes to 4 by 5. Whatever. Reversal in terms of bonus shares. Reversal in terms of rights issue also. Fine. Restating. Is that? Restating is. Then subsequently we are talking in terms of dilution. Okay. How much is the, what is the conversion factor, and based on the conversion factor we have to calculate the revised number of shares, what is the original number of shares, plus we have to add the conversion shares, we'll get the total number of shares. Again, based on that we have to calculate. Only thing we have to be little bit careful is whenever we are paying the interest, on that interest we have to deduct tax. Okay, only on interest we have to deduct tax. is it? And subsequently this is the, okay. This is chapter 14 EPS. Okay. We continue. We'll do this. Okay. Where is that? In which, can you guess on which, from which chapter it is there? It is there from which chapter? Can you guess? This is with respect to what? This is with respect to lease. Fine. This is with respect to lease. Okay. Very quickly, I will just go through the concepts. Okay. Very quickly, we can recap it. Okay. That what are the, just to know the vocabulary of the leasing. Okay. Just to know the vocabulary of leasing. Is that before we start? Okay, we'll complete this. Okay, we'll complete these 5 questions and we'll stop. Leasing, is it right? See, it is what the revision we are talking about. Is it right? What is the lease? It is right to use. Is it right? It is right to use an underlying asset for a period of time. Lessor is the person who is going to use it for some consideration. The lessee has the entity that obtains right to use, okay, in exchange of consideration. Right to use of an asset is nothing but the represents a lesser right for a lease term, okay. Most importantly, right to use, is that we will take into consideration the present value factors, is that this is the lease terms, non-cancelable period, what is the options you are going to have, is it right, to extend the lease. We can terminate the lease, is it right? We have to take into consideration the initial values, is it right? Initial cost is nothing but the carrying amount plus any direct cost. Then we are going to say it is going to be right to use Is it right? It is going to be identified as right to use and little bit I'm just first we have to calculate the carrying amount, then we have to take the initial cost, then we have to calculate the what is the amount of principal and what is the amount of interest. Is it right? In that period we will have non-current liability as well as current liability. Fine. And that is the same process. Is it right? Allocation of lease and lease rentals, step 3. Okay. How much we have to show in the profit and loss account, non-current liability, and what is the current liability. Fine. The same process is applying. Little bit changes. Is it right? Little bit changes. But most important is we are very much interested in what is the current liability and what is the non-current liability and how the lease. Now, what we have said, coming to the things, if you are payment in arrears or payment in advance. Okay, payment in advance means you are paying in the beginning of the year. On the closing balance you will calculate interest. Payment in arrears means you have to calculate interest on the opening balance. Fine, this is very important. Payment in arrears and payment in advance. Fine. And the subsequently we are talking about leasing the right to use the asset. If we are transferring, how we have to what amount we have, what is the fair value and what is the carrying amount. Is it right? That is going to be considered. Fine. Now based on this, is it right? These are all exercises. Is it right? Based on this we will do section D. Fine. This is it is today is 4th. Okay, 4th. Okay, this is related to what? This is related to lease, chapter 12. Fine. What they say is that we will do this. Okay, we will complete this. They will not stop in the meeting. On April 1st 2007, Fino company increased the operating capacity of the plant. On recommendations of the finance director, they have agreed, entered an agreement to lease. Is it right? Initial payment is how much? Initial payment is 173. Okay, initial payment is 173. Payment they have given in advance is how much? They have given in advance is 100,000. Is it right? The rate of interest is how much? 10%. Is it right? Rate of interest is how much? 10%. And anything else? The rate of interest is, the lease does not transfer ownership of the plant at the end of the lease agreement. Fine. By the end of the lease, and there is no purchase option available. No, is that the ownership does not transfer ownership of the plant by the end of the lease, and there is no purchase option available. Fine. Over what period should Fino depreciate the right of use of asset? Is it right? What period we have to depreciate? See, when you are making a depreciation, is it right? When you are making a depreciation, right of use of the asset, is it right? Right of the use of the asset during holding period only. How much, what is the valid period only? Is it right? What it says, from the commencement of the lease to the end of the lease term. Is it right? Next, what is there? You are talking in terms of from the commencement of the lease to the end of the useful life. No, we will not take useful life. Okay, we will take only. We are not concerned about the thing because their ownership is not transferred, and they are not going to have any purchase options also. Is it right? This is the condition. That means what they said, they does not transfer ownership and they don't have purchase options available also. Is it right? Means from the commencement of the lease to the longer of the end of the lease term and end of the useful life. No. From the commencement of the lease to the shorter end of the lease term and end of the useful life. No. The answer is from the commencement of the life till the end of the lease term only. Is that till the end of the lease term? Now, Fino has incurred is it okay? Say yes or no. Is it right? After every question. Is it? Fino company incurred initial direct cost of how much? 20,000 and receive incentives of how much? 7,000. Fine. They received incentives of how much? 7,000. What they are asking us? They are asking us to calculate the initial cost of the asset. Is it right? They are asking us to calculate the initial cost of the asset. Now, in order to calculate the initial cost of the asset, is it right? How much is the present value? See, what is the rule? We have to add all the things. They have got incentives. We have to reduce the incentives. Okay, whatever the cost is there, we have to add. See, the present value of lease payments. Is it right? Is that what where we have to write present value of lease payments? How much is the present value of lease payments? Present value of lease payments is 173. Is that 173,500? Fine. Now, payments are in respect of the made in advance and per annum. How much they have paid in advance? They have paid in advance payment paid in advance. How much? Payment paid in advance is how much? 100. Is it right? Allah mia. Is it? Payment made in advance is how much? 100. Okay. Any doubt you ask me. Okay. I can sense where there should be doubt in the minds of the students. Very simple. I am telling you this. Is it right? Initial direct cost is how much? Is it? Initial direct cost is how much? Initial direct cost is how much? Initial direct cost is here it has been given in the point. Okay. Initial direct cost is how much? 20,000. Is it right? Initial direct cost is how much? 20,000. Fine. Now this is all related to cost. How much they give? They got incentives less. Is it? Incentives. How much is the incentives they got? They got incentives of 7,000. What is the result you will get here? $286,500. Is it right? How much you will get? $286,500. The finance director questions why the lease payments cannot be simply charged to profit and loss account. Which of the which of the which of the two of the following situations would charging lease payment to profit and loss account be correct accounting treatment, assuming Fino company takes advantage of any exemptions available? Select your answers from the drag and drop option provided. Fine. Is it right? Select that option. Now, fine. Ownership is transferred at the end of the lease term. Correct accounting treatment. Is it right? Correct accounting treatment. Ownership is transferred. See what happens? Ownership is transferred at the end of the lease term. The lease is less than 12 months. Means, see what we have to do? We have to take this one. Is it right? We have to take this one, and which one is right? We have to put here. Is it right? Is it what it says? The finance director question why the lease payments cannot simply charge to profit and loss account. In which two of the following situations would charging lease payments to profit and loss account be correct? Assuming Fino takes advantage of any exemption. Select your answers from the right and put it on the left. Okay? Put it. This is what some different type of questions. Is it right? Ownership is transferred at the end of the lease term. We are not talking about the things. We are talking about the lease payments. Is it right? Lease payment. If the lease is for less than 12 months. Is it right? If it is lease is for the less than 12 months, then we are going to put it in the profit and loss account. Is it right? Then we are going to put in the what we have to write? We have to write the lease is less than 12 months. Is it right? This is the condition. Is that we are paying lease payments. Is it right? We are going to pay lease payments. It means it is an expense. Okay? It is an expense. Next. The asset has a low underlying value. The asset has been specially adapted for the use of the lessee. See what happens. Is it right? What happens? The asset has a low underlying value. What will happen whenever you are talking about this? Is it right? What happens? You have the asset. Is it right? You will have the asset. You assume you have the asset of 10,000. Is it right? You have the asset of 10,000. Now, when you have the asset, you will have the lease payments also. Is it right? You have the lease payments also. When you have the lease payments also, you are valuing the asset as such. Is it right? Definitely in most of the cases. Is it right? In the most of the cases, why we will charge in profit and loss account is the carrying amount. Is it right? The carrying amount will be more. The fair value will be less. The fair value will be less. That means that's the way. If that is the case, definitely what will happen? There will be a loss. If it is a loss, then it has to be shown in the income statement. Profit also will show. Is that profit also will? If there is a profit, is that? If it is a profit, we are going to show in OCI. That is the basic difference. Is it right? That is the basic difference. The asset has been specifically adapted for the use of the lessee. If it is specifically adapted for the use of the lessee, is it right? Then we are going to show it where they are showing it in the statement of financial position. We will not go into showing the financial. What we have to write here? We have to write that the asset has a low underlying value. Is it right? We have to, what are the things? This is the one and this is the one. The rule says, is it? The rule says, I am writing here, is it? I am writing with pen. What IFRS 16 says, is it right? IFRS 16 says is that if it is less than 12 months, is that if the less than 12 months or this is IFRS rule, is it right? Or underlying asset is of low value. Is that? This is the rule of IFRS 16. Is it right? If you are satisfying the rule, then it has to be shown in the profit and loss account. Okay. Select the answer from the option provided. What is the total of the lease liability as on 31st March 2008? Is it right? What is the lease liability? Find what is the liability of the lease? What is the lease liability? 31st March. Is it right? 31st March as such for one full year. Is it right? See, when it has been started, it started on 1st April and end with 31st March 2000, is it right? 31st March. It starts on 1st April 2007 and ends with 31st March 2008. Means how many months? 12 months. Is it right? Now, 12 months. How much, what they are asking us, what is the lease liability? Is it right? Lease liability on 31st March. Is it right? What is the lease liability? Lease liability is nothing but what is the payments. Is it right? What is the payments of lease? Okay. They have mentioned that an initial payment is made. The future initial payment is made on 1st. Is it right? How much you have paid an initial payment? You have paid an initial payment of how much? 100,000. Is it right? You have paid an initial payment of how much? This is the initial payment in advance. Is it right? Initial. And what is the present value of future lease payments? Present value of future lease payments are how much? 173. Is it right? Present values of future lease payments are how much? 173. What you have to do? We have to take into consideration present value of future lease payments. Is that? We are talking present values of how much? 173,500. Fine. 170. On this 173,500, what you have to do? You have to add interest. Interest at the rate of how much? 10%. Is it right? Interest at the rate of how much? They said the rate of interest implicit in the lease means by default the rate of interest is how much? 10%. Is it right? The rate of interest is how much? 10%. Means how much is there? 173,500 into 0.10. Is that 17350? If you add it, it comes to how much? 05880. 05808 sorry 91 1 190 850. Okay, 190 850. Fine. How much there? 190 850. Next, we will complete this and stop. Okay, it's good. Tomorrow also we will complete lecture and we will do some exercise questions. Is it right? By the time we can finish it off, inshallah, slowly. Tomorrow we'll do randomly anything which the only procedure is, before I start the section B, if a brief recap of the lecture topic for which we are going to do, and immediately we will do the thing, so that we can have some idea about the basic vocabulary about the thing. On 1st 2001, is it right? 1/4/2007, is it right? 1/4/2007, Fino company took out a lease of another piece of equipment. The lease runs for how many months? The lease runs for 10 months. Is it right? And the payment is how much? Payment is 1000. Fine. Per month in arrears. Is it right? In arrears. And an incentive to the entire lease, Fino received for first month rent free. Okay, first month means what is the lease incentive? Lease incentive is 1000. Okay, lease incentive is 1000. This is per month. Is it right? What amount should be recognized as a payment of a short-term lease for the period 30th September 2007? Huh. 1/1/2007. Is it right? From 1/1/2007, 1/4/2007 to 30th September 2007. How many months is there? 4, 5, 6, 7, 8, 9. Is it right? How many months are there? 6 months. Okay. How many months are there? 6 months. Is it right? How many months are there? 6 months. Fine. Now, we have to calculate for 6 months. Can you calculate it? Try, please. See the things. Total lease payments. Is it right? Total lease payments. How much is there? Is it 10,000 or 1,000 into 10 months? Okay. It comes to how much? 10,000. Fine. Less incentive. Incentive for 1 month. Is it right? How much incentive for 1 month? 1,000. It comes to how much? 9,000. Lease payment for 10 months. Okay. Lease payment for how many months? 10 months. Fine. Is it right? Now. Fine. For 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 10 for 10 months, how much is the lease payment? Lease payment is 9,000. Okay. For 6 months, is it? Lease payment is question mark. 6 by 10 times 9,000. It comes to how much? 5,400. What is the answer? 5,000. Is it right? Immediately, I will send this one. Today I'm sending two files. Okay, I will send the EPS file. I will send the EPS file, and I am sending this file also. Okay, I will send this file also. Fine. Is it right? Tomorrow we'll do that events after the period IAS 10 and IAS 37. We'll complete that, and subsequently that is